Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Ramzan Karamali. Let's get to the three things you need to know today. Well, first up, US stock futures are pointing to gains at the open, and the Nasdaq is set to open at a new all-time high. Investors are waiting on two key inflation readings later this week, but ahead of that, the Bureau of Labour Statistics will be issuing revised jobs data for the period between March 2024 to March 2025. And it's expected to show much slower job growth than previously reported. Plus, it's Apple's big day. The tech giant set to unveil the iPhone 17, and the company is calling the product launch event ore-dropping. We're expecting a thinner version and other new features. Apple will also be showing off other new product updates, likely to include AirPods and Apple Watches. And Oracle is set to report earnings after the closing bell, and the stock is facing a crucial test after surging 40% since June. The stakes are high after the company disclosed a major cloud services deal, which could be worth $30 billion in annual revenue in the next few years. Investors will be watching to see what the company says about the broader software slowdown. That's a hit competitors, including Salesforce, amid the threat of artificial intelligence. Well, let's get a check-in on the futures market, and all pointing in the green, all positive at the moment. The market, remember, the Nasdaq hit a record high yesterday, and hoping for more of the same today. Tech stocks really led the way there yesterday, and actually that spilled over into Asia too. Okay, well, let's dig into our top stories of the day. Stocks are edging higher after the Nasdaq hit a fresh record, and Apple is expected to unveil its latest products at its biggest event of the year. Plus, jobs data revisions are set to be released. Well, joining me now is senior reporter Brooke De Palma, live at the Nasdaq, tech editor Dan Howley, live at Cupertino, California, and Fed correspondent Jennifer Schoenberger. Brooke, let's start with you. The Nasdaq is looking to build on its record day today. Should we expect more of the same?
Absolutely, we should. Based upon what we're seeing right now in futures, all three major indices are seeing some upward momentum before the trading session opens. We know that the Nasdaq closed at that record high on Monday after we saw a downward momentum to end the week last week across all three major indices. And what really led that gain on Monday was Broadcom extending its further gains on Friday. We saw a 9.4% pop in that stock after it crushed its earnings report, and now we saw that momentum continue. That really drove the Nasdaq higher. Also, Nvidia also drove those gains higher. Now investors are really waiting for more key data to come out. We know that we're supposed to get the Bureau of Labor Statistics annual jobs revision this morning. Investors right now are looking for further labor weakness and what exactly that can mean for the Federal Reserve's meeting next week. We also have two key reports. We have that August producer price index set to come out on Thursday, or rather Wednesday, and the CPI report set to come out on Wednesday. And all this is really a debate among experts on the street right now about what exactly this could mean. Could this mean further gains in the equity market, or could we see choppiness in what is typically a weaker September and October?
And Brooke, we're also waiting for some key earnings due out after the closing bell today. What are you expecting?
Yeah, GameStop and Oracle will be two key reports that right now Wall Street is keeping a close eye on. We know that GameStop, that meme stock rally, has had quite the year. The stock is down nearly or more than 25% year to date as investors try to make somewhat understanding of what exactly this turnaround story will end up being. But right now, all eyes are expected around a 3% growth in revenue, largely led by hardware and accessories, especially around the launch of the Nintendo Switch 2 and what exactly that could mean, followed by software and collectibles. We know that collectibles are a major part of their turnaround strategy here. And then Oracle, that stock has had quite the year, especially after they announced that massive cloud infrastructure deal with OpenAI. All eyes from investors are really on that delivery timeline and profitability. We heard from BMO this morning that they believe that Oracle has a durable AI demand helped by OpenAI, and that should drive further acceleration through fiscal year 2028. Also on investors' minds is that October analyst event around Oracle, but certainly waiting to hear more after the bell today.
Okay, let's keep the tech theme running. Dan, you're live at the Apple event in Cupertino. What are some of the biggest things we're expected to come out of it?
Yeah, we're expecting to see a number of new announcements across the board when it comes to Apple products. The iPhone, obviously, this is their annual fall event for the iPhone, so that's going to be the big announcement. The biggest part of that, though, will be this new iPhone 17 Air, and that's according to Bloomberg's Mark Gurman. Basically, this is going to be a thinner version of the iPhone. It should also set up Apple for what could be its foldable phone next year, and that's going to be a big deal as well. But in the current, this phone should have, as I said, a thinner design, a single camera in the back, and potentially a smaller battery. Now, those are big deals because when people shop for phones, they usually want more cameras and better battery life. And so if they have to sacrifice on that just to get a thinner design, they might not pull the trigger. Outside of that, we also have the iPhone 17, the standard version. The Air replaces the Plus, and then the Pro and Pro Max. And those should all get upgrades, here and there. Nothing going to be completely out of the blue, similar to what we're getting with the Air and its redesign. Then we're looking at new watches, the Apple Series Watch 11, as well as the Watch Ultra 3. The Ultra 3 is supposed to be the one that gets the bigger upgrades, the larger screen, satellite connectivity to be able to send SOS messages if you're out in the wild or you're just at a Wawa parking lot, if you happen to be in Jersey. And then on the end of that, we're expecting the new AirPods 3, and those should come now with heart tracking technology, heart rate tracking technology. They already offer something similar in their Powerbeats Pro 2 earbuds, and so it's basically just transferring the same technology to Apple's AirPods. And obviously we'll see all the big software updates that we saw at WWDC in June, but the iPhone 17 Air, that's going to be the biggest piece of the show.
Just before I ask you about AI updates, these are all going to cost a lot more than what they do right now, correct?
Yeah, we could see some price increases on the iPhone, and that I think is going to be probably one of the more significant pieces of this. There's some analysts expecting between a $50 to $100 jump in pricing. That could also be a big issue for some consumers. Now, other analysts that I spoke to said, look, $50 to $100, most people still get their phones subsidized, so that's just basically inconsequential when you think about paying that over a year or 2 years. The $50 to $100 isn't really going to make anyone bat an eyelash. But if you're the type of person that likes to pay up front so you don't have that long contract life, well, it could give you a little pause.
And Dan, just quickly, the one thing that people do want to hear about from Apple is AI, but they are going to stay tight-lipped. Am I right?
Yeah, we're not expecting anything as far as new AI announcements from the show today. That's usually saved for their WWDC event in June. We got some updates there. We're not expecting any kind of new Siri. That's probably coming in 2026, at least according to what Apple's said. Really, what we saw at WWDC was Apple kind of slow rolling AI across its products. And I think that's really going to be what they do throughout the life of these new devices and moving forward. Slow roll the release of some different new AI updates, but no big splashy announcement until potentially that Siri. But at this point, as much as Wall Street is kind of nervous about Apple and AI, and yes, Apple is behind Google for sure, I don't think people are going out and buying phones specifically for AI quite yet.
Okay, well, let's focus on the economy now. Jennifer, the Bureau of Labour Statistics is expected to release revised jobs data. We're expecting it to show fewer jobs created, but this could be pretty significant, right?
That's right, Ramzan. The Labor Department is releasing revisions to jobs data for the period of April 2024 to March 2025. So this is going to cover mainly the Biden administration more so than the Trump administration. And for that time period, economists are expecting somewhere on the order of 600,000 to 900,000 fewer jobs created during that time period. And just to put that in perspective, we know that the current numbers right now tabulate to 1.76 million jobs that were created in the prior 12 months through March. So this would be a significant downward revision, and it is likely to feed into this narrative of weaker job growth that we've been seeing and what that will mean for the Fed. It's probably going to push the narrative for the Fed to cut rates. It's also likely to push the narrative of, do we need better data collection methods from the Bureau of Labor Statistics, something the administration could pounce on as well.
Jennifer, Brooke and Dan, many thanks for your insights this morning. OK, coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We're watching Nebius, United Health and Nasdaq. First up, Nebius. Shares are surging after inking a deal with Microsoft. The AI-focused cloud platform company said it will provide Microsoft access to GPU infrastructure capacity at its new data center over the span of 5 years. The total contract value is $17.4 billion, with the potential to reach $19 billion if Microsoft acquires additional services or capacity. Next up, United Health. Shares are rising after the company said it expects most of its Medicare Advantage members to be in highly rated plans that earn bonus payments next year, a boon for its health insurance business. Preliminary data shows that that would be at least that the members with at least be in plans with at least 4 stars and the threshold for earning bonus payments, the company said in a filing. The star rating system set by Medicare evaluates plans on quality and customer experience, with financial rewards for those that perform well. And finally, Nasdaq, the stock exchange operator, will invest $50 million in the Winklevoss twins' Gemini space station ahead of its IPO this week. As part of the agreement, Nasdaq's institutional clients will be able to use Gemini's custody and staking services, while clients of the crypto exchange will have access to Nasdaq's platform for collateral management and tracking trading activity. The investment strengthens the ties between one of the leading traditional finance firms and the digital asset sector. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's Trending Tickers page. Now, tech stocks are powering the Nasdaq to fresh records, but my next guest says there are signs of exhaustion in the large cap tech space. Joining me now, Mark Hackett, Nationwide Chief Market Strategist. Mark, you expect the shift away from large cap tech to continue. Can you explain how you're looking at the sector right now?
Well, to be fair, most of us have expected this shift for quite some time, and frankly, it hasn't happened. The tech leadership has actually been very warranted given the secular growth rate, the margin expansion, share buybacks, things like that. But the growth trajectory of the technology space and the rest of the market is starting to converge through the rest of this year and into 2026. So as we move forward, the risk-reward profile for things like small caps, value, some of the financials and industrial space is more attractive than the tech space, particularly as those growth rates converge and as the Fed moves back into a loosening cycle, which usually helps earlier cycle names.
So, Mark, we've now heard from all of the Mag 7 stocks with their recent earnings reports. What did you make of what you heard?
In general, we've been impressed by the durability of their earnings. Obviously, the AI cycle continues. The upsides are not quite what they were in the previous years. And frankly, the market reactions are not nearly as much. If you look through yesterday, we have an 11% return for the Mag 7 year to date, and 11% return for the remainder of the S&P 500. So while the headlines are still focused on that group, and frankly, this isn't necessarily a call against the tech space. It's more of a risk-reward call as the growth rates converge and as the valuations become pretty stark at that point.
And Mark, I just wanted to pick up on AI here. I spoke to a CEO recently who said there'll be winners and losers in this space for sure in the coming years. But it's getting harder, though, to pick those winners. Don't you agree?
We certainly are in the Wild West aspect of the winners and losers. Clearly, we know who the winners are from the infrastructure technology space and a lot from the power space. But in terms of who are the beneficiaries of the spending, we really haven't seen much of that yet. This has been much more of an investment story so far versus a return on investment story. Once we get forward there, that's going to be the key differentiator. And again, part of this thesis of a leadership shift from the people that have already benefited from the build out to those that are going to benefit from the efficiencies.
Now, Mark, let's move on to jobs data that's out later this morning, the revision. We could see quite a big revision. What do you think that actually tells us?
It feels a little bit like deja vu, doesn't it? A year ago, we were facing exactly the same thing. We had a weak July report, and then we followed that with a weak August report, and then we had that big 818,000 revision to the number. Now, while this is fairly old data that's being revised, the market doesn't see it that way. And we saw a big reaction last year. That caused the Fed to go from thinking about a 25 basis point cut to moving it to 50 basis points. We don't necessarily see that this time, but that is what is at stake here. Is the market is currently expecting 25, but the numbers being watched very closely by the market, and there will likely be a reaction if it is in that kind of 800,000 revision size.
Yeah, we'll be keeping an eye on that number. Anything greater than 800,000, I'm sure, will make a big difference. But after that, this week, we get PPI data and CPI data. They're not the favoured measure of the Fed, but they're still really quite vital because it's the last sort of major data they get before they meet next week. What are you expecting here?
Well, if you look at last month, PPI and CPI were a pretty good forward-looking indicator on the PCE deflator. There's elements of PPI and CPI that go into that number, which, as you alluded to, is the Fed's preferred inflation metric. But the interaction between CPI and PPI, I think, is the most interesting at this point. We have PPI running ahead of CPI, which means companies are actually eating some of those tariff impacts in terms of what we've seen over the last several months. That's going to be an interesting thing to watch in this number. Also, the acceleration that we've seen is a little bit unnerving. So we'd love to see a stabilization here, but also looking at the gap between PPI and CPI might give you a little bit of an indication on where we're heading from a margins perspective. In the second quarter, PPI was ahead of CPI, but companies were able to withstand that through productivity gains. That becomes more and more difficult as these tariffs take more hold.
And the tariffs is quite an interesting point you make there, because I know it seems to me you're firmly in the 25 basis point cut for next week, but moving forward, that could have a bigger impact on what the Fed does going down the line, right?
Well, that's certainly from the indications that the Fed has given us over the last couple of months. Tariffs are absolutely a significant concern of theirs. At this point, you'd think most of that has been baked in. The Fed has alluded to the fact that they're viewing this as more of a one-time step up than it is a prolonged period of pain. But yes, for sure, the tariffs are a huge impact on the Fed. But then you also have the potential shift of leadership as we come into next year. So there's a lot of moving parts from a Fed perspective. At this point, the market's been giving the Fed the benefit of the doubt for the most part. We're not necessarily seeing a breakdown in confidence among Fed officials. We'll see how that develops as we get into the spring of next year, and certainly after the meeting next week.
And just a very quick one, Mark. I asked you about the Mag 7 generally and how you saw their results, but overall, what have you made of earnings season?
Very impressed. Now, when you think about it, what we were coming out of the first quarter, if you remember in April, we had the Liberation Day chaos. Companies had a little bit of a get-out-of-jail-free card in order to give conservative estimates. That was seen through the second quarter results. But what we're seeing more importantly is estimate revisions going forward moving higher. So for the third and fourth quarter, but also into 2026, we're seeing that expectation inflect higher, which is tremendous news and frankly pretty important as we transition from more of a technically driven rally for the last couple months to what we would expect to be a fundamentally driven rally as some of these cascading tailwinds start to hit.
Mark Hackett from Nationwide, many thanks for your thoughts. And that does it for Morning Brief. Much more ahead on Yahoo Finance, including opening bid next.